Consumer discretionary stocks have gotten crushed as of late. Let's go through some stocks we like and some stocks we would avoid given what's going on. We thought, what is the most consumer discretionary purchase one can make in America? And we came up with inflatable lawn Santa sold at Home Depot. We're going to go through the math as to what happens with that item in these new tariffs and what's going on with consumer discretionary stocks. This is ticker XLY. It's the consumer discretionary ETF. It's down 26% peak to trough. And what's happening? Everything that they make in China and other countries is sold at companies within this ETF. Let's take a look at what's happening to those items. Time for the math on the inflatable lawn Santa. You're running a company that sells these to Home Depot. You pay $100 from China. You mark it up 25% and sell it to Home Depot for $125. They mark it up 33% and sell it to the consumer for $166. Now let's do the new math with 100% tariffs from China. That end consumer price, $293. And what the market is betting is that the consumer is going to walk into Home Depot. They were going to think they're getting this thing for $166. It's going to cost them $293, and they're just going to stop buying it. So let's take a look at one of the names within consumer discretionary. This is Target. Target trading at a $56 billion enterprise value compared to the expected EBITDA of 8 and change. It's about a 7x EBITDA. Very, very cheap, usually a very attractive place to buy a company like Target. But here's the math on what might happen. That $107 billion in revenue, let's say that goes down 7% because consumers just start balking on goods. That's $100 billion in revenue. But what it really hurts is the net income margin, right? All of the things made in China probably have a lower margin because you can't raise them all the price that you need to. A 2% net income margin puts you at about $2 billion in net income. That makes this $56 billion a very fair price and it not a good buy, right? So this is what the market is juxtaposing here essentially, right? How bad are these tariffs actually going to be? How bad is this going to be for a company like Target? And what's the right price for a stock of Target? So do we like consumer discretionary stocks down here? We love the valuation, but what we're going to avoid here is the made in China sellers, right? So we're going to go into growers, maybe like OnCloud, that make stuff outside of China where the trade deal will get done well before it gets done with China. Thanks a ton for everything you guys do for us. We're going to keep putting these out in these crazy markets. Keep hitting like, subscribe, all that stuff, and thanks a ton.